Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Philip Lee, one of Ireland's fastest growing corporate law firms and expert advisors at the heart of the Dublin and London startup, fintech, and crypto communities. Eoin and I are both thrilled to be back with all of you after running a monthly schedule for this summer. We're now back on our regular weekly episode drops. For this week, Eoin and I dove into the shortcomings of Metaverse graphics through the lens of Metaverse deep thinker Matthew Ball and his new book on the Metaverse. What's up with the Ethereum Merge? The big fundraisings of Irish unicorn Wayflyer and Techstars grad Alloy. The death of ING's Yolt. Block's Cash App's small dollar lending milestone. And old friend Bradley Tusk takes a supercharged regulatory advisory into crypto and DAOs, or decentralized autonomous organizations. All right here on Money Never Sleeps. Hello, Eoin Fitzgerald. How are you today?
Pete Townsend, your fine self. How are you doing?
I am very good. Just got all the blinds closed here because we are recording during the day for first time in a long time.
What are you talking about? It's in the evening, Pete. I'm working.
Oh, sorry. That's right. It is in the evening. We
you
always
must have been. The darkness must have confused you.
The darkness did confuse me. Absolutely. So awesome to be back doing this again after weekly. Our summer hiatus, going back weekly again. I missed it.
Yeah, me too.
I totally missed it.
I'm like, my wife doesn't want to hear about fintech news every week. I was like, I need to talk to somebody about this stuff.
Awesome. Well, we had a great time in Spain. I know we did an episode after we came back from the US, and I talked about the ridiculous 8 to 10 to 11 different combinations of payment options that you have there, and just depending upon the machine that you're using or whatever. But pleased to say that in Spain, there were only 3. In Spain, you could pay cash, which was, sometimes preferred, but everyone had a sum up machine or something like that at these little markets that we'd go to. And it was tap. It was tap, 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 tap. That's all we did. And, sometimes you needed a PIN depending upon what the machine was, but so 3. So happy to come back from this wonderful European Union that we're in to say that it's great to have this payment homogeneity.
Oh, that's the word.
Across Europe that the US will I don't think we'll ever have. Right?
Yeah. You didn't make it to the American football game where a sum up made the news.
No, I didn't. So for all of our friends out there in the US that may not be aware of this, that Northwestern and Nebraska had a football game. I can call it football because I'm American, in Aviva Stadium here. And at some point during the game that the card machine stopped working.
In the entire stadium, they were sum up.
The entire stadium. So rather than say to all these Americans that were over, sorry, no beer and hot dogs for you guys, it was just give them away for free.
It's free for all. Like 75% of everything on the day was free.
Yeah, amazing. I've been at Aviva Stadium for European League games, or not even European League games. I think it was Ireland versus, might have been Montenegro or somebody, right?
Yeah.
And the food was gone by halftime. They didn't have enough food. Yeah. And that was for an unfull stadium. So the fact that they were able to give away hot dogs and beer to thousands and tens of thousands of American fans was just awesome.
Yeah, it's pretty cool. So, not for sum up, for everyone else.
No, not for sum up. And but I've been over the summer as well. I started reading this book, Metaverse by Matthew Ball, and it's the Metaverse and how it will revolutionize everything. Shout out to Liang Wu and his Life in Color newsletter on Substack. And we'll stick that into the show notes. And he's the one who pointed out Matthew Ball's Metaverse book to me. And it's really got me deeper down this rabbit hole. And, if I can go any deeper. And what I've been looking for was an easy definition of the Metaverse, because it's like, where do you actually go with this? And the shortest and most poetic version of Metaverse that Matthew Ball has is that it's the live 3D version of the internet, right? So just think about that for the second. The live 3D version of the internet. Okay. Starts getting your imagination going a little bit, right? The long definition, basically, if you break this definition down into different clauses, each one of those is a chapter in the book. And so the long definition, as he says it, and this really underscores how much work we have left to do on the infrastructure side of building a metaverse, is a massively scaled and interoperable network, okay, of real-time rendered 3D virtual worlds that can be experienced synchronously and persistently by an effectively unlimited number of users with an individual sense of presence and with continuity of data such as identity, history, entitlements, objects, communications, and payments. That is more than a mouthful. Okay. And each one of those 7 or 8 points is a chapter of the book where he goes through how difficult this is. Now, I've listened to him before on Invest Like the Best with Patrick O'Shaughnessy.
Yeah.
And he did an interview with him 2 years ago. And where Matthew Ball had been head of Amazon Studios, I think, and really creative, really brainiac around this, deep into the video game side of things. And where all of this is coming from, and I know you'll like this, is that the best forebearer that we have of Metaverse right now are 2 video games. 1, Fortnite, 2, Roblox, right? Those are the best, perhaps, incantations of where this is all headed. And he's deep into, he quotes Tim Sweeney all the time in the book, who's Epic Games, and Epic Games obviously, are behind Fortnite. So, there's a lot left to do. One of the good examples out of the book is that, just take, for example, the ability when you're take Fortnite, right? And imagine playing Fortnite with a VR headset, and that it's not only you playing, but I don't know, 100 of your friends.
Yep.
And you're walking through one of these zones in the game and you knock over a tree, right? You shoot a tree and knock it down. Do all the other players see it the same way at the same time? Right? And do they actually hear the tree fall in the forest, right? Which is the old adage and the old argument. And when someone else walks by that, is that tree still going to be down? Or is it reset for players? All these types of things. You need this persistence of data and experience, and for multiple players to be able to do this. We are a long way away from that. So most of these video games build and develop to a bar, and they set the bar of latency, which is how long of a delay do you get between, actually instructing something through the game and it actually happening, that they build it to a latency of 10 to 20 milliseconds. The quickest you can possibly send a message of any kind between New York and Hong Kong is 45 milliseconds. So the world's infrastructure and fiber optics are not there yet to be able to support what is the Ready Player One and or Snow Crash visualizations of what the metaverse really is. And there's a lot of work left to do. So case in point, if this has been dreamt up and that we can point to and say, this is how it could happen, there's going to be a ton of money that goes into the companies that are building the infrastructure that will enable this to really happen. It is such a massive, massive market and a huge opportunity. There's so many different little intricacies of what needs to be done. So the book's got me very excited, obviously, as you can tell.
You know what? I was talking to a guy about a week and a half ago, consulting firm, and they were asking about my kind of view on it. And I was like, well, look, I said, we talk about this a lot. I said, I'm not as far down the rabbit hole as you. And I'm skeptical of a lot of it, but where I see it live now is in gaming. And I talked about kind of Fortnite. And most nights my son, he's 11 now, so he stays up later, and the TV with the Xbox is in the living room. So I can't help but listen to him play Fortnite online with his friends in the evening before he goes to bed. And I was watching him the other night and I was thinking, do you know what, we could get to a point in the future whereby in his game he could go to virtual McDonald's or whatever and order, and it would be connected to, because we've obviously Deliveroo or whatever here connected to the McDonald's locally or whatever. So in that example, you could see a scenario where he could go to one in the gaming world that is then connected to the physical one here and the delivery service, and all of a sudden he's paid for it using his in-game currency and it's delivered to our door here. So that's not that far of a jump to connect those two things.
You want to know the big jump?
Go for it.
The big jump is the machine to brain interface that you command to say to your brain, you're not actually hungry, and you don't order McDonald's.
Yeah. Okay. Well, I think we're a bit away from that.
You get to keep playing because you've tricked your brain into thinking that you're not hungry anymore because you want to stay in the metaverse for another 3 hours. Yeah. Right. So it's all there. It's all there. And one of the articles that I found this week that kind of summed it all up was in Decrypt on the 27th of August. And it was, after $177 billion in investment, why do metaverse graphics still suck? Right.
Yeah.
And the poster child for that was the bobbing Mark Zuckerberg head in front of the Eiffel Tower.
Yeah.
And it's like, really? Is that the best we can do?
So I asked. He looked like one of those Wii characters from a Nintendo Wii all those years ago when you're playing tennis.
He did. And then they did some sharper rendition of it and made his eyes look a bit more, I don't know, steely and focused. Like what's his name? Data from Star Trek. And I asked my 9-year-old about this, and I'm like, okay, I'm reading a lot about Roblox and Fortnite. Show them both to me. I'd seen them before, but I hadn't really paid attention. And he showed me Fortnite, and I'm like, okay, pretty immersive, pretty good graphics in there. And then I said, show me Roblox. And he showed me something on there, some Star Wars simulation where you could put on these different Lego outfits. And I'm like, the graphics kind of aren't the best, are they?
Yeah.
And he's like, well, yeah. I said, well, what do you care about? He's like, well, what do you mean? I said, well, when you're playing Fortnite, what do you care about? He's like, well, I just don't want to be killed by a randomer. I'm like, what do you mean by that? He's like, someone who's just wearing the default, someone who's wearing the default, whatever you get when you go into Fortnite, the default skin. Yeah. And, so he wants to be able to pick up gear and do all that type of stuff. I'm like, do you care that much about what the graphics look like? He's like, not really. I'm just there because it's fun. And I said, well, what about on Roblox? What's that? He's like, well, I just want to build stuff. So, and listening to others talk about this, it's like, this experience needs to be fun. That's the big thing about it. And there needs to be something that keeps you coming back and keep you wanting to do more. So all of this science that goes into video games and creating this is really, the core of what's happening at the metaverse level. But like I said, we are so far away from the big vision of what this will all look like. I read Ready Player 2 over the summer. That was totally dystopian, totally messed up. But it was bubblegum throwaway pop. I just totally turned me off that. And I started reading more Neil Stephenson again because he's the more thoughtful writer about the future. But anyway, that's what I have to say about the metaverse. As Forrest Gump says, that's all I have to say about that. But we're going somewhere. We are going somewhere with this.
Absolutely.
Looking at the here and now, big moment happening over the next week to 10 days is the Ethereum Merge. Have you heard much about this?
Nope. This means nothing to me.
Okay. So Ethereum is a proof of work blockchain as it is today, as is Bitcoin. Solve a complex algorithmic cryptographic puzzle in order to lock down the rights to mine that block, and you get mining rewards for it, right? And that's what miners do. And years ago, I read a next version of an Ethereum white paper that talked about moving to proof of stake, which is that validating transactions are done by nodes that have staked the token, right? And that they're randomly selected on who gets to validate that node. But you need to obviously have skin in the game. You need to stake. I think it's a minimum of, I don't know, I think it's like 30 ETH or something like that in order to stake so that you can validate a transaction block and then, be rewarded for that. So, and not have to solve this cryptographic puzzle. In layman's terms, the big benefit is that this uses 99% less electricity.
Which is good.
Okay. So that's been the big thing about proof of work blockchains like Bitcoin and the current version of Ethereum is that it uses way too much electricity. So Ethereum is moving to proof of stake, which uses far less. And that will be happening over the course of the next 10 days. And some of the final pieces of the merge were put in place because Ethereum have had their proof of stake chain up and running for, the last year. And now they're just merging those two chains together. And that will open up tons of runway really for the Ethereum story and as that unfolds. So that has been getting a huge amount of attention. Now, one of the impacts here, think about this. What is it that, I'm not sure how up the curve you are on this single element of it, Owen, but NVIDIA are the big makers of
chip makers,
GPUs, graphical processing units, whatever they're called. And those are used primarily for video games, but crypto miners have been using them because they have far more processing power than, the normal processors. And what's happened is that if Ethereum now needs 99% less electricity and there's no mining, power required, or very little mining, if any mining power required for Ethereum, you can have all these GPUs that are not needed anymore.
Yeah.
So I heard Nick Carter from Castle Island Ventures was talking about it on their podcast that I was listening to this morning. And he said, what did he say? He said, it's like that scene in Star Wars where Alderaan gets blown up and Obi-Wan Kenobi says, there's been a disturbance in the Force. I've just heard a million souls crying out. And it's like, he said, there's been a disturbance in crypto. I've heard a million GPUs crying out because they'll no longer be necessary. Yeah. They're gone because you just won't need them anymore. So this is a pretty big deal, and everybody's going to be holding their breath. It's like, again, Nick Carter was talking about, is this, a Y2K moment that, is it more Y2K that it's like this big, scaremongering going on that Ethereum may fall over, in 10 days time or in 9 days time. But most of the world is like, no, actually it's fine. It's going to happen. It's, we'll be able to get through this just fine. And, we'll wake up on the 16th and everything will be running smoothly on Ethereum. So it's a big moment. Some people are saying it's, Ethereum, the price of Ethereum is going to go through the roof because of this. Others are saying it's already priced in. I don't know. I won't, comment on it either way because this is not investment advice, right? But that is, to me, one of the biggest stories of this month. Yeah.
Yeah. Well, sure. Look, we will obviously.
Is that like totally over your head, or you have a view on it?
No view. No idea. The only things that I kind of Nvidia obviously had that they're being banned from selling chips to China or something. Wasn't that? Weren't they in the press for that recently in the US?
Or something like that.
Something like that. Yeah. I only know that because Nancy Pelosi sold all her shares the day before, supposedly.
Ooh, good for her.
Yeah. Coincidence.
Jesus. Yeah. Some people get away with murder.
Oh, no. I know because I follow one of the Twitter threads there's a Nancy Pelosi stock tracker, and it tracks all of the movements she makes in her own share portfolio. And there's always convenient timing of sale of shares. So there's lots of people out there who just have portfolios that model her one. So that's how I knew about Nvidia. And that's about all I know about what you just said.
It's like I think there is a investment strategy there, which is the political insiders, copycat portfolio.
Yep.
And say, hey, just follow that.
Yeah. But that's not advice at all.
Yeah. So no, not advice.
We will come back to the Ethereum merge though, because obviously over the next 2 weeks or so, it'll kind of start to play out as to what that means and what it looks like.
Yeah. No, I can't wait to see what happens. It's like it goofily saying it's a whole new world, but it feels like things are happening. Like, for example, layer 2s like Polygon, the Polygon blockchain, are there because the Ethereum processing time was too slow. It was too expensive because the gas fees, as they're called, the transaction fees, get very expensive when there's a lot of the network's clogged up and there's a lot of transactions going through. So this is going to clear a lot of that. It's not the total panacea for what ails Ethereum as a network right now, but it is a big step in the right direction. So it's going to be fantastic to see what actually happens, and if people can actually, in the crypto world, or that are seeing this and what that does to the whole landscape. So, it's going to take a few months to unfold, but it's going to be quite liberating, is the way I like to describe it.
Perfect.
Speaking of liberating.
Yep.
Wayflyer have managed to liberate Credit Suisse from $253 million in their capital for
nice
financing for our friends from Wayflyer. Thank you. Pulled that one out of my ear. Point to that one. But big deal, obviously. That company just keeps growing and growing, and awesome to see them doing so well. Any view on that from your perspective, Owen?
Oh, look, I mean, we've obviously looked at Wayflyer a few times, obviously in terms of the story. Great Irish success story. Because actually, that was in, let's see, when was that? That was the 1st of September in the Times. And actually, it's interesting because only this week, I think, Clearco announced they were closing their Irish
Yes.
/ European headquarters. So they opened an office in Ireland about 12 months ago, I think, planning 50 to 120 jobs. And they've announced that they're shuttering that operation now. And obviously Clearco would be probably the most direct competitor to Wayflyer. So it seems like they're stepping back their European expansion, while Wayflyer are obviously raising money to help fund their international expansion. So, really interesting, but they're killing it. Absolutely killing it. And
They are. And I said in reading the news, I'm like, I just don't know who their customers are. And so I go to their website and look at the headline names, which any big fintech or any big, SaaS-based startup, whatever, will list on their website. So Geologic, Bionic Gym, Branch, Current Body, and Dock and Bay, all of these e-commerce sites that are leveraging the Wayflyer kit to be able to have smarter analytics into their day-to-day and into their business. And in return, obviously, Wayflyer have access to that data and can use that to determine the feasibility of lending these platforms money, right? That's the whole Wayflyer model, as you know. I've never heard of Geologic, Bionic Gym, Branch, Current Body, or Dock and Bay. I've never bought anything from them, but who cares, right? It's that they've been able to reach all of these e-commerce platforms and be able to bring them on board. And, you've got to expect that based upon how focused that Wayflyer have been on being a completely digital financial business, that the onboarding, which can be costly for lenders, is going to be pretty inexpensive for Wayflyer to do. And their ability to then service them is fully digital and SaaS-based. So it's an awesome combination of all the best of fintech and all the best of SaaS.
Yeah.
And, another big success story. I don't know where we go from here with the Wayflyer, right? What happens with that?
Yeah, because I would see it that the comparison for them is the likes of Stripe. And I say that in the sense that Stripe are the infrastructure that you build upon. And I put Stripe in the same category as Shopify. There's hundreds of online stores built on Shopify that do millions in revenue that we'd never have heard of. But they're doing it on the Shopify platform. And totally. It seems like Wayflyer are doing the same. So to me, the solution is more financial products, and it's more products probably tied around even those guys, maybe their customers onboarding their own customers or suppliers or, fraud or KYC or those sort of supports, kind of the same model as Stripe, where they've rolled out additional functionality that you would need to grow your business using their kind of underlying tools. And I think that's going to be the same thing here, because that you could easily see them going into a kind of virtual debit card or virtual credit card offering for their customers, a further kind of lending product that taps into what they're already doing. But I think when you see some of the work being done by some of the other companies, I know we're going to talk about Alloy in a few minutes, but like that, it's probably building out or offering all of the functionality needed for someone to build an e-commerce store on top of it then.
Yeah, no, I think you're right. And there is this Square Shopify thing. Yeah, Stripe. There's Wayflyer are in that club as far as I'm concerned. And what they've built means that they could go in a couple of different directions to generate this FLYWHEEL. Can you say what that is?
Yeah, it's a flywheel. That's it.
Yeah. Shout out to Simon Taylor. He was talking on Lex Sokolin's FinTech Blueprint about flywheels and the data flywheel.
Oh, brilliant.
And he's talking about the same thing that we went through last year around Square and BNPL and what the Afterpay acquisition did for what he was calling their data flywheel, that we were calling the FinTech flywheel. Yeah. So if there's anybody in the world that would come up with something without listening to our podcast, it would be Simon Taylor. He's a genius in all this stuff. He's talking through all the mechanics of the processing of credit cards and how that all works. And it's I learned something from him every time I listen to him talk about that. I've listened to him talk about that 100 times. Right. So, brilliant. Shout out to Simon for it was awesome to hear him come to the same conclusion.
But I think like that, there you've a handful, maybe 10 or less kind of fintechs. And I'd agree with you. I'd include Wayflyer now in that group, whereby they have sufficient scale, but also they're so embedded in their customers that as their customers grow, they're growing. So the more they can help their customers grow, then the more they'll grow their business. and like that,
Definitely.
it's, you have Square, you have Amazon, you have Shopify, you have Stripe, you have a good few that can just then roll out an additional feature with a new price, and all of a sudden their revenue is doubled because of something. But something that's relatively easy for them to roll out to their client base then.
Yeah. Any luck with getting Aiden or Jack interested in coming to have a chat with us on the podcast?
No, we'll keep trying. We'll put a shout out, public shout out.
Public shout out, but also to Emma Walker.
Yes,
our good friend,
who might be able to help us out.
She's a mentor on the Techstars Web3 program, and so we'll see if we can enlist Emma to help. And we'll see where this goes. It'd be great to talk to the two of them. I think I mentioned before, I talked to Jack years ago when he was coming out of VC and thinking about doing this, and just an intro chat, and that's all it was. But, awesome to pick their brains.
One to continue to watch.
We will keep our eyes on that. Hey everyone, this is Pete. Let me tell you about the folks at Philip Lee. A few years ago, I was at my first venture capital industry dinner in Dublin, and honestly, I felt a bit lost. I bumped into Andrew Tizali, one of the partners at Philip Lee. He bought me a pint and introduced me to the team, and they took me under their wing. That take you under their wing approach has been what I've heard consistently from fintech and crypto startups who I know have worked with Philip Lee in Dublin and London to help them wrap the right legal framework around their business, fundraising, and regulatory needs. And I can't recommend them enough. Get in touch with the team at philiplee.ie or on moneyneversleeps.ie/philiplee to learn more. Alloy, wanted to mention them as well. They're a Techstars grad going back to 2016, I think. They just raised at a 1.5 billion valuation. They're fraud prevention. So they're the widget that gets plugged into a lot of these consumer-facing fintech platforms and crypto platforms. Gemini use them. Yep. So they've raised an additional 52 million at a 1.55 billion valuation 11 months after raising 100 million at a 1.35 billion valuation. So like an add-on to their last round rather than being a big new round, 2x, 3x valuation. But definitely an up round, which is great in what's going on right now. So this is all from TechCrunch on the 1st of September. And if you take a look at what they do, I mean, they are integrated with so many different little pieces of infrastructure that is needed when you are onboarding customers, doing KYC, doing KYB, which is know your business. And, they are riding this wave and this bridge between fintech platforms that are B2C, but also then crypto platforms that are more centralized, like a Gemini, like a Coinbase, like whomever. And that they are, kind of really underscoring that no matter where you are in terms of having relationships with individuals where you have some type of financial transaction taking place or some type of monetary transaction taking place, you need to prevent fraud. You need to prevent money laundering. You need to prevent people doing things that they shouldn't be doing. And you have that responsibility. And Alloy have been, obviously a great partner for tons of these platforms. They're doing really well. No,
it's a company that most people wouldn't necessarily be familiar with outside of deep kind of KYC focused fintech investors sort of thing. But again, like you said, it's the interconnectivity and how deeply they kind of are embedded in with their customers, which obviously allows them to scale, in the same way we were just talking about with the guys in Wayflyer and others. So yeah, it's a really interesting one to watch. Like there's loads of companies in that space. It's a very crowded space, but they seem to be, obviously the quality of their API product and all the data sources that they're pulling, allows them to obviously do it in a far better way than others. So very impressive business.
Oh yeah. I mean, nearly 1 million decisions processed daily, and the names right across their website. Brex, Gemini, as I mentioned, Marketa, Petal, and Ramp, all big names that, but people in this space, at least you and I, know about. And it, you need to be able to move so fast when you're bringing on new customers and the millions of customers a month that, you're bringing in the heyday. It's a big responsibility. So again, awesome to see them doing this big raise.
Also, and it's a product that has to work every time. There's no margin for error, really.
Yeah.
Whatever about your payments companies, and we were joking about SumUp earlier, occasionally there'll be issues outside of their control or whatever, but like your fraud prevention tool has to work all the time.
Absolutely. So That was a fun one. I know you wanted to mention a couple of others.
Yes. Yeah. So we were obviously talking about Square earlier. We were talking about it relative to Wayflyer, and we talked about them before with Afterpay and everything. So the other one was, and this, I saw this on, it wasn't even a news announcement as such. This was on FinTech Business Weekly by Jason Mikula, which I subscribe to and I can highly recommend. It's where I get a lot of my kind of business FinTech news from. But he was saying that Cash App, obviously, which is the Square/Block solution, they've now hit a monthly milestone of 1 million small loans. So they do over $1 million small dollar loans every month to their customer base. Now these are kind of $600 up to $600 loans. You repay them in installments or as a percentage of incoming funds. And it's their first kind of credit product they've rolled out. But, we've been talking about these before, and like they've 47 million monthly active users on Cash App. So like that, they're able to then just bring on a new, you'd call it even a feature necessarily, not even a product. It's just the ability to, within the app, put in for apply for a $600 loan. Obviously get approved it very quickly. And already they can go from, they only rolled it out in the last year, and now they're at over 1 million users borrowing money every month.
Wow. What's the payback for the $600 loan? Payback period.
What's the payback period? It is...
over a few months?
I don't think so.
Next paycheck?
Hold on. No, they're designed to be... they're very quick kind of turnaround. They're effectively short-term or payday type loans.
Okay.
Yeah, because they're designed so that people are kind of repeatedly borrowing it. Yeah,
it's kind of like, depending upon what your income level is, right? You get to the end of the month or the end of the week or the end of the 2 weeks, and you're a few hundred short because you just got to fix your car, right? Well, there you go, and then you get that, and then you've got your next paycheck coming in. Of course, they're going to do incredibly detailed analysis and run their algorithms on the inflows that you have coming in, the outflows you have going out, and say, what is it that we can actually fund for an individual like this, right?
And they've been quite smart about it, because it's set up so that, if you're due to make your repayment for your outstanding balance in full and you don't have the money on your Cash App card, they will take it from the debit card that's linked to your account. So to kind of avoid you kind of missing payments and stuff like that. But also it almost ensures that they'll be repaid in full each time.
Yeah, so. I think we're hitting the point in the world right now where that for someone to be able to pay their energy bills, that they may need a loan like this.
Yeah, absolutely.
Because things are going through the roof. So, do we run the risk of getting into this payday loan category?
Absolutely. And, I definitely think so.
Individuals that are vulnerable customers, as we call them, that don't actually have the capability to pay these back. Hopefully, with some old school payday lenders that are, just chancing their arm, that we could end up in a bad place. But when you've got, players like these guys that are doing it, you're in a different kettle of fish.
Yeah, it's up to a month to repay, so it's a month of a term max. So it is designed to be a very short-term thing, and obviously they're able to build in an immediate kind of credit limit. I think they use, or they can access the credit bureau data if needed, but ultimately they're using it. They're underwriting you based on your transaction history and the fact that a lot of transactions are going through your account and you're a customer, and they're able to kind of run or assess your credit worthiness or your transaction ability or your repayment ability based on your transactions in your account. So it's really it's a really smart move like that. In the scheme of things, not a big leap for them to roll out a product like that and embed it in the app in itself and have it easy for people to access. And like that, very very quick kind of turnaround for them to get to over 1 million loans every month.
Impressive.
Yeah.
So how fast the space is moving, right?
Yeah. So that was an interesting one. And then the other one I just saw, and this was from like 2 weeks ago or something, 30th. Sorry, this was Yolt being closed down by ING. Yolt started off in 2017 as a consumer-facing money management app, but ING has evaluated the business and concluded it's not feasible to achieve its ambitions.
Yep.
So this was coming anyway, because it got rebranded last year as Yolt Technology Services as a B2B open banking kind of offering, but now they're phasing it out altogether.
I wonder what ING are doing behind the scenes with their banking platform as it is anyway, right? We know that traditional banks just can't do some of these same types of things as newly engineered financial platforms can.
Yeah.
But obviously they got tired of Yolt, and it's this age old, right? That is a big traditional bank going to build their own digital business and perhaps cannibalize some customers? Or are they going to partner with somebody, or what are you going to do? Or are you going to just rebuild your platform from scratch? That is a headache.
It's
anyway.
A strange one.
All of
at the same
catch
time,
22.
Because there's been quite a number of acquisitions in the open banking kind of technology space. So the fact that they just pulled a plug on it, the economics mustn't have been good at all. Because like that, you had Apple acquiring Credit Kudos and, the Scandinavian one, whose name I can't think of, got acquired as well.
Zettel? No.
It'll come back to me.
Okay.
But again, there's been lots of acquisitions in the open banking space, and surprised at that as a kind of offering, trying to compete with the likes of Plaid and others, that someone wasn't willing to take a punt on it, or they weren't willing to kind of try and continue with it in some shape or form.
Yeah, it just feels like rather than buying a fintech brand or building a fintech brand and bringing that to consumers, that you just, improve your infrastructure. And open banking acquisitions are a good first step to do that. And I'm oversimplifying it by saying it that way.
Yeah,
but
Nordigan was the Scandinavian open banking
right.
platform. It got acquired by GoCardless. I knew I had it in my head somewhere.
Yeah.
They were just a couple of ones that stood out.
Yeah. I was going to say that, talking about open banking, all these kinds of things, FedNow is happening in the US, I think, which is, this real-time payments network that is finally going to test mode. And I think there were some questions coming on that, okay, what will that do to Venmo and PayPal and those instantaneous payment networks, right? And someone even suggested, what will it do to crypto? And it's like, I don't think we have to worry about anything there. The amount of people that actually choose to live their financial lives in crypto right now is a drop in the bucket compared to the problems that are being solved by being able to move money on the current financial rails in real time. So crypto is doing tens of millions of different things, and it's not about, the benefit of being able to move money instantaneously. In some places it is, where you don't have access to those kind of tools, or you don't have, a modern banking network or an upgrading banking network. But, crypto is a different story for me. I won't go down that rabbit hole.
Brilliant.
But one other one that was interesting that just came up that I noticed, and I picked it out just for you, Owen, knowing that you read his book. And I think I might have read it. I think I did. I can't recall. But Bradley Tusk, we had on the show years ago.
Yeah.
And Bradley Tusk's thing is to spend time with industries that are facing regulatory hurdles. And he did this with Uber. That was his big one.
Yeah.
And where he invested in Uber. And Travis Kalanick. And saw, as a side note, Travis Kalanick is kind of building up some kitchen venture in Latin America, which is another story for another day. Yeah. But Tusk Strategies now, which is Bradley Tusk's business, ClimateDAO have engaged Tusk Strategies to push Congress to write DAOs into law, or decentralized autonomous organizations. And ClimateDAO is buying up carbon offsets to increase the price of them, so that those, instead of buying carbon offsets as a corporation to offset your carbon production, that you actually have to do something that actually improves the real world rather than just relying on buying carbon offsets. So awesome to see Bradley jumping into that. And, that I won't get into the detail on the connectivity between what a DAO is and how that makes sense from a climate perspective. That's a much longer story for another day. But it was love to see that bit of news for you, Owen. I know you're a fan of Bradley.
Look, we obviously had Bradley on because Tusk Ventures, they work with startups that need to be regulated, or like that Uber, I think Airbnb, a few others. He's worked with all the bigger ones. But we've talked about it before, and like in the US, the big tech firms, the Googles and Facebooks and stuff, have more lobbyists on their payroll than, a lot of the normal, typical financial services firms, or the tobacco firms, or all of the firms that would be challenged by Congress or law back in the day. And we're seeing it more and more now in the financial services space, but specifically with fintechs, because, all of the big name firms have their own kind of public policy teams now, whose job obviously is to try work with government agencies. Niamh O'Donnell from the Banking Federation, who I know pretty well, she's just joined Stripe as they're on the public policy team there. And I've met one of their colleagues before, really good guys. But again, like Stripe wouldn't be alone in having a public policy team to work with the regulator, or not just the regulators, but mainly with government bodies and government agencies in different countries to see if, obviously, to create a more supportive environment for them and their customers in the different markets. So, it's good to see that earlier stage companies are trying to take that same approach. I must find I meant to send it on to you. There was an article, I think it was in the New York Times, about the guy, is it FTX's Sam
Bankman-Fried.
Yeah, about how he's starting to become a major player in the political donation space because he's trying to get a number of things through Congress in the crypto space. And it was tracking his donations, millions of donations to key kind of senators who were voting on particular bills that he wanted to pass. So yeah, I'll find that and send it on to you. But same idea applies.
That's business.
That's business, and like that, they're trying to get a favorable environment for their companies. So yeah, it's interesting. But I find that stuff really fascinating. Dodgy on one hand, or questionable on one hand, but.
That's how it works. Yeah. I mean, Bradley was the one that said that 99% of the politicians he had ever met, bar one, which was Michael Bloomberg, were totally in it for the next vote. And that was it. They didn't care. Yeah. It was just, how do I get myself reelected? And Michael Bloomberg was the only one who actually, stuck to his word on things. Yeah. And the world has moved on since then. But, he's doing what he can to help in an industry that even up to 2 years ago, he was like, no, we don't invest in the crypto space. So, now the writing is on the wall that this industry needs some help. And, they're jumping in to help, which is awesome. So go Bradley. Speaking of crypto funding, I had a good chat with David Anglis from Apollo Capital just before we were chatting tonight. And they got a lot going on down in Australia, loads happening there, where they're very excited about the raw Web3 talent that's coming out of Australia at the moment. So I mentioned DAOs a few minutes ago. Upside DAO, which I think is a great name for a DAO. They are an Australian incubator investment DAO that Apollo Capital are cornerstone investors in. That is now live. And their comment from David is that they're blown away by the caliber of Australian projects that are coming through the programs that they have set up. So, just more on that DAO concept and where that's all going. And I'm sure Bradley, if he wants to jump over to Australia next to handle that, he'd be, we can make some nice introductions for him.
Yeah, absolutely.
Cool. All right. We leave it there. Tonight.
That's all I have,
my friend. All right. Yeah. That's all, folks.
All right. Talk to you soon.
Okay. Adios. That does it for this week, folks. You can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor and advisor focused on where fintech meets crypto and crypto meets Web3. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!